Hello, everyone. Thank you very much for joining me again. Today, my name again is Peter Azikwe. I'm a mortgage associate, and today we'll be talking about how to improve your credit score, or better still, how to improve your credit report. So today, I'll be doing more of a presentation as opposed to just doing most of the talking. My goal today here is to just, enlighten people a little bit on how to improve their credit history, as well as maybe have people get better knowledge of credit reports and how it works. So stay tuned as start the presentation. Thank you. Okay, so what is a credit report? A credit report is a document compiled by a credit bureau to show information on an applicant or individual. What kind of information are we talking about? We're talking about employment history information, address history information, debt history information, and yes, address is included because that's how landlords or real estate companies usually use that information to see how a person behaves as well, right? So yes, those kind of informations are collected in a credit report. Okay, now the reports are usually prepared in two forms. One is the one for the consumers, which is you and I whenever we are requesting it, and the other one is for the credit bureau members. And the credit bureau members are usually companies that grant credits like banks, credit unions, etc., as well as companies that use reports to make business decisions. So you would have seen people like real estate like rental companies, where they want to pull your credit score to see if you are worthy to be given the rent. Or you've seen insurance companies. You've also seen auto loan companies using that. So those are also people who the credit bureau prepare the reports for. Okay. Now, this is one important thing I should also tell people. There are two major credit bureaus in Canada. Number one is Equifax. Number two is TransUnion. Very few banks, I think maybe RBC uses TransUnion. Majority of the banks in Canada or credit unions use Equifax. Now, so every other platform that you check, like the Mogo or what's that famous one? I can't remember, but all those ones, whenever you check them, they don't give you the exact rating of what your credit score should look like. Whatever result you get, just do a plus minus 25 points or plus minus 50 points, because they are never as accurate as what your credit report can be. So in the future, if you ever wanted to get your accurate report, it is always best you reach out to either TransUnion or Equifax, depending on the institution you're going with. Okay? So remember that, Equifax and TransUnion. Now, how is a credit report scored? The maximum score of a credit report is 900, which obviously is excellent. Trust me, in my entire life of finance, I have only seen one person with 880, and she was a senior member. And the minimum score is 300. You do not want to be on that score, 300. You want to try your best to be above 680. Okay, that's good. Whenever you're above 680, that's considered good. Okay, now let's go to the next one. What is a credit score or report? Sorry, we've already talked about this one. So now we're going to discuss factors that affects credit score. I don't know if you guys know this, but there are factors that can impact your credit score either negatively or positively. Number one, and the biggest of them all, is the payment history. Yes, how quick you make payments to your credit. By how quick, I mean, are you making your payment on time or not before the due date? The other one is the utilization. Utilization bases off on how much you use on your credit. So let's say, for instance, are you maxing out your credit card? You don't want to max out your credit card. So if you're in the habit of maxing out your credit card, that is bad. You want to be using maximum 75%, if possible 70%, but maximum 75%. Should you want to stretch it, maybe 80%, because I know sometimes it can be financially difficult, right? But 80% max. But do not go into the habit of using up the whole credit or the whole limit on your credit card, because it does have a huge impact on your report. And that's where you see it can contribute 30%, or it can affect your credit score in that way. Now, the other one is your credit report history. So like I mentioned, your report history could be like the very first credit file you open. So it could be you opened a credit card the very first time you started obtained mortgage or loans or anything debt in the history of Canada, those histories can contribute 15%. It is usually a best practice to keep accounts or trades that have been open for a very long time, because the longer the history, the better your points improves. But whenever you shut down those reports or trades that have older history, yes, they do have an impact on your credit score. So just remember that your credit report history does have an impact on your credit score, okay? Then the other one is new credit. So if you're always looking for new credit cards, or you're always doing pre-approvals with multiple agents or multiple people, or more importantly, you're going to buy a new car, for instance, now, and you go to a dealership, you want to be very careful with them, because whenever you go to a dealership, they have a very, very good practice of pulling your credit score first and then sending it to like 5 banks, which are then in turn going to pull your credit score. At the end of the day, that will hurt your credit score, okay? So sometimes the banker is usually looking at like, the more you pull the credit score, the bank or in financial institutions, they start seeing you as a credit seeker. And because that is the case, that kind of have huge impact on your credit score. So you want to avoid doing a lot of credit pulls in a space of 30, 60, 90 days, because those things get collected and eventually has negative impact on your credit score. Now, others would be how you do a credit mix. I always recommend that for the credit mix, maybe do a mix of a credit card, like a MasterCard and a Visa, as well as a store card. So like the Leon's credit card or the Walmart credit card, those are called store cards, right? So just remember, as much as you're doing the credit mix, you don't want to have so many on your file, okay? You don't want to get yourself in a habit where you are just out there getting like 10 credit cards and line of credits and overdrafts, because that does have some impacts on your credit history, okay? So next one, we're going to go to like a visualization here, or visual presentation here. So you can see here how I broke it down. 35% payment history. Yeah, that's definitely contributes a huge lot to your point. And like I said, 900 is the max. So you can imagine 35 would give you about 315, right? So you want to be making sure your payment is always on time, on or before the due date. Remember that, guys. Always on time, on or before the due date. Utilization, make sure you're not going over 75% if you want to get the best out of utilization. Your report history, like I said, you want to make sure that you keep your oldest accounts, your oldest trade accounts open. Even if they expire, then fine, they expired, right? But if you're closing them, it does have an impact on you when you close them. Instead, close out the new trade accounts, because those ones really would not affect your credit report history. The new credit, just refrain from always getting banks to pull your credit or financial institutions to pull your credit. Mind you, when financial institutions pull your credit, it is a hard hit. Any institution that involves credit, when they pull your credit, it is a hard hit. But when insurances, when real estate companies pull your credit, it is usually a soft hit. Even with like let's say you're doing like auto insurance and all that stuff, those ones are soft hit because you're not seeking credit. They're just doing it just to check to see if they can give you the best rate, right? But remember, financial institutions always have the worst hit. So that's why when you go to a dealership, the first thing you want to tell them is, listen, if I don't get approved in 2 institutions, don't worry about it. Because if you go 5 institutions, that's 5 institutions that's going to pull your credit, plus the dealership pulling your credit. So that's 6 different people in just one day or in a space of 1 week. And that's not good. Or if you're looking for pre-approvals from point A, B, and C, those are not good, okay? Now, credit report rating. So it goes from 0 to 9, okay? 0 means too new to rate. So obviously you're new, you just opened the credit card, so you've not used it, so we can't rate it, can be rated. 1 then means pays or paid within 30 days of payment, due date. So this is usually the best rating. You want to see something with a 1 attached to it whenever you're looking at your credit rating, because whenever you have that, it simply means and tells the bank that, hey, this person always pays their payment on time or on or before the due date. Now, when it starts getting bad is when you go to rating number 2. Rating number 2 means you're 30 days late, but you're not up to 60 days late. Okay, so you're already past 30 days late, but you're not up to 60 days late. And then it goes to 3, which means you're 60 days late, but you're not up to 90 days late. Then the fourth one goes again like that, 90 days all the way, but you're not up to 120. Now it starts to get worse when you get to stage number 5. So you see, rating number 5 tells you that your account is over 120 days overdue. You don't want to see that on your credit report because it affects your what? Your payment history. Then you have the 7. So normally when there is a 7, that means you and the bank have decided to settle. So maybe you and the bank or you and the agency you're owing have decided to settle. That is when you always see a 7 on your rating. 8 means repossession. So it's either you have willingly returned the whatever it's in stock, if it's a vehicle, the asset, whatever it is, that's what 8 means. You've willingly returned it, or they have forcefully taken it away from you. Okay. Now the worst of it all is bad debt, which is 9. 9 basically means you refuse to pay. So you are either going to be written off, or it will be written as bad debt, or it will be placed for collection. Okay. So those are the things you want to really avoid on your credit report, because they do have a way of harming your credit history 100%, especially the 9s. Now the next one is the types of credit ratings. So many of you may not know this, but you just see them when you've ever come across a credit report. So there are types of credit description. Here's the type of credit rating description. So 0 means open account. Account was opened within 30 to 60 days and has not been used, hence no reporting is made. R stands for revolving credit. So you see things like credit cards, Visa, MasterCard, store cards, also includes authorized overdrafts. Some reporting agencies include line of credit under R. Then you have I, which stands for installments. So installments will be things like car loan, student loan, etc. And then we have the next one, which is C. C stands for line of credit. So sometimes if you see C on your report, it just basically refers to your line of credit, okay? Then M obviously stands for mortgages. Sometimes or most times you would barely even see your mortgage pull up on your credit report. I don't know why, but it's just something that doesn't really show up in most cases. But this is just in the event you see it, that's what it stands for. Now, what most people who have come across credit reports would see, it's something like R1. So R1 would mean you have a revolving credit, which means it stands for a credit card or it stands for an overdraft. Or you see a C, C1. C1 means you make early payments. But when you start seeing R2, that means you're late at a certain time in your payment for your credit card. Or you see C2, that means you are late one time in your line of credit payment. Or you see I2 or I4, it also means you were late one time in your car loan or student loan payment. Okay. Now, Bankruptcy Navigation Index. Now, Bankruptcy Navigation Index is something a whole lot of people don't know, but it actually does exist in your credit report. You may have seen it if you've seen a credit report, but this is really, really huge. It's a scoring model mostly used by Equifax to show the likelihood of an applicant going bankrupt in the next 18 to 24 months. It ranges from 1 to 600, with 1 being extremely likely that you're going to file bankruptcy and 600 being less likely you're going to file bankruptcy. Now, the Bankruptcy Navigation Index identifies applicants who are in severe financial difficulty, but are not missing payments. So it could be like these applicants are only able to make their minimum payments, So when the thing starts to capture the fact that this person only makes minimum payments, then it starts to affect their Bankruptcy Navigation Index, which is going to also impact your payment history. So remember this, that BNI are always made available to credit card companies and auto industry. So if you ever find out that you're getting declined from a credit card application, even if your credit score is about 640, it is because your BNI is low. So always have that in the back of your mind, okay? Now, best practices, like I've mentioned, payment history, like I've said, in order to maximize 315 points, you want to do this. You want to make your payment on time. You want to score R1, you want to have 0-1, you have I1, M1. Those are the ratings you want to have. Utilization, do not exceed 75% usage of your credit card. Max credit limit, e.g. if you have $1,000 credit card, for instance, maximum spending should be about $750, okay? Your credit report history. Avoid closing any trades, like I mentioned, if possible. That holds your oldest reporting history. If you must close that, just make sure you're doing the new ones, okay? So this way you can maximize 135 points. New credits, like I said, avoid all those. You don't want to be a credit seeker, so avoid it if you can, okay? I'm going to try and wrap it up here, okay? Now, other, like I mentioned, it is somewhat a good practice to have a credit mix, like I said, MasterCards and Visa and a store credit card. However, it is important not to hold too many trades on your report, as this can harm your credit report, okay? So also, do not engage in the habit of using your credit card and paying it off immediately. I know a lot of people who do this. It is not a good practice. When you use your credit card, say you go to a store, you buy something right now, and then you go home and you transfer the money back to your credit card, that does not help with your credit history. It doesn't even show anything. It doesn't even improve your credit history. What you want to actually do is allow the transaction carry a balance on your credit card. You have 21 days to pay it to avoid interest. So wait till at least the 2 weeks or 3 weeks, then you pay it, or wait till you get your statement, right? So when you get your statement, you go ahead and pay it. That is the best practice. As long as you're making your payment, do not try to not make a payment. Do make a payment, but don't make a payment immediately after using it. That way you can enjoy the best use of your credit card. Okay, so that's going to be my conclusion. I really hope that this little presentation that I showed here did help a lot. And if you have any question, like I said, always feel free to reach out to me at peterazix@gmail.com. It's Peter, PETERAZIKS @gmail.com. I would also put that in the description. And yeah, if you have any question, please feel free to do so. And in that being said, enjoy the video and thank you very much for watching. Bye.